Welcome everyone to another of our weekly investment manager videos, and many thanks once again for tuning in. US equities have been, frankly, the only story in town for global investors over the past 10 years. But most of that focus has been on the small cohort of large cap tech household names who have delivered some ridiculous returns. However, should investors be sleeping on the huge number of opportunities within the mid and small cap US sector? Well, today I have the huge pleasure in discussing this and other topics with David Rose. David is the Chief Investment Officer of Granahan Investment Management and manager of the Granahan SMID Select Fund, amongst others. But first, before we get into the content, if you are enjoying our channel, it would be wonderful if you could subscribe. This really does assist us in delivering our financial planning and investment content to a wider audience, and you would genuinely be helping us all out. So, onto the content. Many thanks for coming on to the channel today, David. It's great to see you once again. For the benefit of the investors in the UK, who are Granahan?
Yeah, welcome, Andrew. Thanks for having me. How's the Doberman, by the way?
The Doberman is absolutely fantastic. He's not in at this moment in time, so I don't think we'll get interrupted. But then again, he may just jump through the window because he's that kind of Doberman, to be honest. He doesn't like to be away from me.
Yeah, I can understand. Well, Granahan is a 35-year-old firm in the U.S., and more specifically in the Boston area, where we have been focused on small and mid-cap stocks for our entire history. In fact, we still have two of the founders at the firm, and we have about $5 billion US in assets, and it's all long-only growth investments. We have about 10 different products, believe it or not, in that small and mid-cap universe, and they're all very distinct from each other. But we've really done a good job of expanding our not only our products, but also our reach globally. And we've launched 3 UCITS strategies for European investors and Asian investors in the last few years, including the small and mid-cap portfolio called the SMID Select portfolio that I manage.
Yeah. You are absolutely notable, like you say, for US and small and mid cap equities. Are investors underinvested in this area, and therefore why should they be considering more of a tilt towards this asset class within their portfolios?
Yeah, Andrew, it's kind of interesting. It's almost like the movie Toy Story, where small and mid-cap stocks have been just beloved for the past 100 years, offering the best returns. In fact, mid-cap stocks have the best risk-adjusted returns as well. But, in the last 10 years or so, everybody likes the shiny new toys, and Facebook, Apple, Amazon, Google, Netflix, and now Tesla and cryptocurrencies, right? And it's kind of left the small and mid cap universe unloved.
Mm-hmm.
The FANG stocks used to trade at about, from an overall market cap of about at the same level as the overall market cap of the Russell 2000, which is the most popular small cap index in the US. But now, recently, it's gotten to be 3 times the weight of the whole Russell 2000 Growth Index, just to show you how much love those stocks have gotten relative to the small cap universe.
Yeah.
And there's other interesting things that kind of point to this dynamic that you referred to. Small cap stocks are trading at unusually low relative valuations to large cap as well. And then just to put one last final touch on it, normally when small caps have a very strong return, like 30+% over a 9-month period, usually there's maybe $8 to $10 billion of inflows that go into the universe as a result of people chasing performance. But in the last run that we've had in the small cap universe, that ended in the fall, small caps have actually had outflows of about $5 billion.
Wow.
So it's very unusual. I mean, even in a world where fund flows haven't been good, when there's been good rallies in small cap, there's been inflows. But more recently, the recent example is that there's actually continued to be outflows.
Wow. Just on that point, why is that? Would I be right in thinking that ETFs and the rise of ETF investing has kind of alluded to that?
Well, yes, but active management actually had a really good year last year.
Yeah.
And so it's not really a changing dynamic where ETFs are getting more popular. I think it's just people are looking elsewhere, focusing on, the biggest names out there. And we really think that that is opening up a real good opportunity for small caps to lead for the next decade.
Absolutely, absolutely. So looking at that opportunity and focusing upon your SMID Select portfolio, how are your portfolios positioned at this moment in time, and why?
Well, our portfolio is always very consistently positioned to capture growth. And what we're looking for are dynamic growth companies in the usual places, but also the unusual places.
Hmm.
And so we're constantly looking for hidden gems, so to speak, in the small cap universe. Andrew, the small cap universe is really the most inefficient space, even in the US market. There's by far the most companies and there's the least amount of analyst coverage.
Hmm.
And so we have a very experienced team of investors. We average 30 years plus, and we have really tremendous networks, outside of our own company. And so we take advantage of finding these kind of hidden gems in the growth universe, looking for dynamic growth companies that can have very strong secular growth for 10 years plus, finding companies with hidden assets in them that are relatively unknown. And then we look for, growth in unusual places, and companies that may be undergoing a management team and are, introducing new products, and or could benefit from cyclical growth factors. And so we're seeing lots of really good growth opportunities right now, particularly as the economy is rebuilding and reaccelerating after COVID.
Yeah.
And the other thing that's really exciting, I think, for investors to consider, that we're really positioned well for is the global economy is going to go under this massive change to go to carbon neutral in the next 30 years.
Yeah.
And it's going to require trillions of dollars of investment spending to have that occur. And it's going to create a tremendous amount of new opportunities that we can't even imagine right now.
Yeah.
And so we're trying to find these companies that are really going to help the world reach its objectives for carbon neutral and other sustainability objectives, because we really think that's going to create a lot of really tremendous growth opportunities for companies that can find the solutions to these monumental problems that we have as society.
Yeah. I think I need to go back to the opening of the video where the large cap tech stocks, the household names, the fangs, call them what you will, have really benefited. But now it's a case of revisiting your portfolio, looking at where the opportunities are, not just in the long term, but also from a valuation perspective. And again, this time that I've spent with you and understanding what your proposition is, from my perspective, you're experts in your field, and be it through the process, be it through the individuals that you have within Granahan, does seem like there's great opportunities moving forward. David, once again, it's been an absolute pleasure to spend time with you discussing the proposition and hearing your thoughts on these investment opportunities. You stay safe, and I'm sure we'll catch up soon.
Great. Thank you so much for having me, Andrew.